Hi, all of our followers. We are doing a Facebook Live Q&A today about the do's and don'ts during the home buying process. It can be quite the process for a lot of people, and a lot of people like myself who are first-time home buyers. A lot of things we don't know that we need to be aware of. So we are here today with professionals in the industry, several years experience. So I'm going to let you guys introduce yourselves and let us know how much experience you have too. So we didn't know that you are the experts to go to with all our home buying needs. So Cindy, go ahead.
Okay. My name's Cindy Kinsler. I'm with People's Mortgage, and I've been doing mortgages for the past 16 years. And it's been easy times when there was no income, no assets, no documentation loans, to now we have to document, who your firstborn child is. So it's become quite the tedious process, but as long as you keep your stuff in line, it's not that difficult. So as long as we know what we're doing, it's not too bad, but it's been a long time.
Great. And Cindy, what company are you with?
People's Mortgage.
And what's your phone number if people have questions for you?
My cell number is 402-214-1068.
Great. And we do have a couple viewers popping in. So if you guys have questions during this, please let us know. If you've had any random questions about do's and don'ts during home buying, or just any other questions for us, feel free to chime in and we'll make sure they get answered. So Jan, tell us about you.
I'm Jan Nicola. I work with Keller Williams Realty, and I've been a realtor for over 10 years, and I work the greater Omaha area, including Fremont, Blair, Gretna, all directions of Omaha. And I work with all home buyers, from first-time home buyers, move up, downsizing, to executive homes. Whatever your wish is, you can call me and I will help you.
And what is that phone number to call?
My phone number is 402-720-5413.
Okay, so now we're going to take a minute and show you guys their business cards so that you can get all their information. So we're going to swap. And here's their cards. I will also post pictures of these in the comments so you have all of their contact information. So again, we're here with Cindy Kinsler with People's Mortgage and Jan Nicola with Keller Williams. And we're going to answer some questions about do's and don'ts during the home buying process, which, for some people is a 2-month process. For some people, it's a 2-year process. So it's really good to know to make sure that we can still get the home of our dreams, when it's time for that. So Jan, why don't you tell us about an experience that you've had recently?
Yes, Cindy, that couple I've been working with, you have them approved, and we've been searching for homes for about 2 months, and they've written an offer and it's been accepted, and they were walking around on our second showing placing furniture, and they said they're going to go to the furniture mart and get all new furniture for the home.
Well, I know that's a very common thing, that people love to go to Nebraska Furniture Mart because it is, it's your new home and you want to buy it. But what we strongly recommend is that a customer doesn't go and buy a lot of things. Now, you can still use your credit cards, like you can buy your gas, buy groceries, do regular purchases. But when you're purchasing thousands of dollars of furniture, it can make a difference in their debt-to-income ratio. So we strongly recommend that they purchase things after they move into the home instead of doing it before the closing, because it does complicate it.
And it's also good to get comfortable in your house payments. See how much, if that's a comfortable payment you can afford, and then know how much to spend on furniture. So
Cindy, let's say I decide, there's a really great sale at Nebraska Furniture Mart. I have to buy this couch. If I call you, can you tell me if it's something I can do or not, or how does that work?
Sure. So when we do the approval process, we look at the total debt to income and get a snapshot. When we're doing the process for the loan, if you're making a change to credit, you do need to call me, because I need to know what the balance is going to be. If you're opening a new account, I need to know what that new account number is, because I have to actually document it with the credit bureau. So we have to put it on the credit report for the underwriter to see. So I need the name of the company, the account number, and what the balance is, and what the proposed payment is going to be. And then I put that in there saying that that's what you're going to be using in the total debt to income. If it works, let's say it's only $100 a month, as long as the debt to income stays within the guidelines, then you're fine. But there's some programs, like the first time homebuyer programs with NIFA, that you can't go above 45%. So even if it's 45.01, you can't do it. So that $100 a month can make a difference in situations like that. So as long as they call and it works within the ratios, then we're fine.
Okay. So just remember to keep Cindy updated on through the whole process.
Great. So I just want to remind our viewers, we have a couple viewers watching, so we are doing a Q&A about do's and don'ts during the loan process. So if you have any questions about purchasing a loan or a home and getting a loan for that, or just any other questions about the home buying process, feel free to chime in the comments and we will get your questions answered. We're here live with Nicola, with Keller Williams, and Cindy Kinsler with People's Mortgage. Together, you guys have how many years experience?
26.
Yes.
Yeah. So wealth of knowledge for free that you guys have access to right now. So if you're replaying the video, you can still comment and we will reply to the comments through the Facebook. So feel free to still ask questions or contact them directly through Messenger on Facebook. So we do have some questions coming in. Okay. So let's see. Joey is asking, he is looking at buying a home, but he knows he's going to be changing jobs. What does he need to wait, or can he change jobs, or what does he need to do in that case?
Yeah, and that does happen quite frequently, but when you have employment, if you're changing a position, you need to be on that job for 30 days and have a paycheck stub from them. Unless you're getting a contract of employment like a teacher, then that's possible that you can stay with that company or go to a different school, because we'll actually have a certificate from the school saying that we're giving you a contract of employment. But it's really only teachers that get those contracts anymore. You might have some doctors and some other high-end positions, but the majority of people, when they start a job, they're getting an hourly wage, or they're just getting like a regular paycheck each week. So we really need to see a 30-day pay period to make sure that you really are working 40 hours a week and that you're making $20 an hour, so that the underwriter can see it.
I have a question. What if the individual changed companies but the same type of job? Is that okay?
It is, as long as the income didn't change. So if they're changing from they were at a car dealership as a service writer and they were getting a paycheck, but now they're going to be at a different car dealership, but they're going to be a commissioned salesperson. That is not okay. So as long as the income stays the same and they're getting an hourly wage, we would still need to have a 30-day paycheck, because we need to see that that employment is really working 40 hours a week, and 30 days is the requirement. So if there's a large gap, like let's say you quit your job and then you had 2 months off, that would require probably a little bit longer pay period as well.
So Joey, I think the advice I'm hearing is don't change jobs.
No.
Until you're in your new house.
and be really nice to your boss. If they ask you to work overtime, do it.
So what if, unfortunate circumstances happen and somebody loses their job?
I had that situation. One of my buyers, it was during the home buying process, and he was laid off. The company was doing a whole bunch of layoffs across the board. But then he did get hired back on within a couple of weeks. Did that, if I remember right, that just delayed the loan a little while?
It would, because they're still with the same employer. We just have to document that they're back on and that they're working their same wages. So a layoff situation is difficult because it happens. Our economy, there are a lot of times, just like with ConAgra that happened just a few months ago, there was a lot of people that lost their jobs because they relocated them to Chicago. Those positions weren't available. So it does become problematic if you do have that situation, but letting us know, telling the agent, contacting the lender makes a huge difference, because then that way we can prep the situation where my underwriter knows what's going on, and then Jan can actually contact the listing agent or contact the seller to say, hey, we're going to have a little bit of a delay. But if you keep it a secret and we verify employment 2 days before closing and you quit your job, or you lost it, that's a problem.
Naughty. Okay, we have a question coming in from Carol, and she says that she's in the process of buying a new home because she's having a baby and needs some more room, so congrats, Carol. And she's ready to buy a car that can house her whole big family now. So does she need to wait on buying a car?
Go ahead.
Yes and no, because it's just that same debt to income ratio. You do need to let us know, because if you're going to get, I've seen some car payments that are $750 a month,
Ouch.
which that could totally eliminate the ability for you to purchase. But if the car payment's reasonable, I guess I haven't had a car payment for a while, so I'm so cheap about that. I just don't want to do it. But the car payment, if it's like $300 and it works in the budget, then that can allow you to qualify. But just to kind of give you an understanding, for $1,000 in the house payment, it's only $5 a month. So if you're going to take $500 out of your budget, that's a huge amount of house that you could have purchased. So if you can hold off on purchasing the car, maybe you can get a different one after the closing. But if you absolutely have to have it, as long as we're aware of it and you don't just surprise us that you purchased something, then it should be fine.
Okay, so Carol, my suggestion would be call your lender and go over it with her first and find out what kind of budget before you fall in love with that $750 a month car.
I saw that the other day. I was shocked. That's too much.
That's ridiculous.
Wow.
You could travel somewhere with that money.
I couldn't.
No.
I couldn't do it.
No.
I'm too cheap.
Okay, so another question that we have coming in is a gentleman who is closing in 2 months and wants to know if he can use his credit card to pay for his closing funds, or does he need cash?
I believe you need the cash, right?
Yeah, you do. I actually had a client that was an unusual situation. She ended up purchasing a horse with the cash that she had for closing.
Oh.
And she called me and said, okay, how do I, can the title company take the payment for the down payment on my credit card? I'm like, no, where's the funds that was in your bank account? And she said, well, I bought this horse, her name's Dixie. I'm like, you have to take Dixie back. Like, you can't have a horse. You're going to have to sleep under that horse if you want to have a place. Because we have to use the funds that are available. It has to be cash. So transactions have to be documentable. The government likes to see where the money's been for the past 60 days. And using a credit card is not an acceptable source because that's a new debt. So then I would have to count that payment in addition to what your regular debt is. You can't borrow funds in an unsecured way.
Right. Can you have gift money, like from parents or something, for the down payment? Or closing costs?
Absolutely. You can definitely do that. We do have to document the money from the parent, so we have to see where the funds were, because the government wants to make sure that the money's not being laundered, with all the...
Oh, you don't accept drug money?
No.
Darn.
Well, terrorism, they want to make sure that the money's coming in from a good source. So you have to track it for the 60 days to make sure where was it before you got it as a gift or your client got it.
Okay.
That's a great question.
Yeah. So cash is king, everybody. So hang on to that cash. Suzanne wants to know, what is the minimum credit score for a loan?
The minimum that we have is 580, which is with a program called FHA, the Federal Housing Administration. But the higher your scores are, the better the interest rates and the programs that are available to you. But you only need to have a 580 credit score. The average, in the United States is about 650. So really, 580 is quite low. But if you have a situation, like some of the clients that we've had, that we've pulled credit, maybe they're not at that 580 level, we can actually do credit repair and help them figure out how to get their score up. For example, I had a customer last year, we were at 550, and then we now pulled her credit, and she's supposed to be closing in July, and her credit score is a 665. So it moved up a lot in order for the customer to get qualified. So it's not just you have to be at 580, but we'll coach you to get where you want to be.
Okay, so you'll give her some ideas of what she needs to do to get her credit to that point.
That's correct.
In the past, I've had a client who had no credit. They paid cash for everything. Like they paid cash for their car, they paid cash, just everything. And so when they went to apply for a loan, they had 0 credit score. I mean, not
Nothing.
0, they just had no credit. So, and I think they were advised to open up a credit card account. Is that correct?
Yeah, you can. If you can do no credit score. So that's a great point. So if you have a situation where you've been paying rent, we'll take a 12-month history from your landlord. If you have a cell phone bill, we'll use that. And almost everybody on this planet has a cell phone now. So we need to have on-time payments and have documentation, and we can just get a credit reference letter. If you have payments, like let's say that you've been paying your homeowners or your car insurance, we can use that from your insurance agent to say that you've been paying that on a regular basis. So we can create a credit portfolio, even if you do have a zero credit score. We can create that for you.
That's very good to know, because this buyer, this was a few years ago, but he was turned down from one lender. So there are options. Just if you're turned down, don't give up. Cindy can help you with all different loan programs.
Well, and a lot of times we can structure it so we know when you can start purchasing, so that Jan can start showing you a house 4 months from now or 6 months from now.
Wow, that's really good to know. Okay, if I'm in the loan process, what happens if I miss a payment on my current mortgage? Am I SOL, or how does that affect my new mortgage?
Well, a current delinquency can have a huge impact on the score. So right before closing, we do have to pull a new credit report. And I just had a customer that we were in the process. We had already done the pre-approval. We wrote the contract, and the contract was accepted. And then I had to do an update, a supplement, and his credit score went from like 630, and it dropped down below the 580 point. So the problem was we had to recreate the wheel. We had to take him off the loan and put on the mother-in-law so that we could actually get them to qualify. So missing a payment can have, a 75-point drop. It could have a 100-point drop. So it could take you to the point where you don't even qualify for the loan program anymore. So making schedules of payments is extremely important. Set it up on auto pay, set it and forget it. Is that, that Ron Popeil or whatever. So you really need to make sure that those payments are coming on time. And just saying, oh, I just forgot, an underwriter doesn't like that. They don't want to, think, oh, well, you're just going to forget to pay my mortgage now. Right. So it is important to pay it in a timely fashion.
And that brings up auto payments. So if people are looking to fix their credit, putting all their bills on auto payment is probably a good idea.
Extremely good idea.
So you don't miss anything and everything's on time, and
that's right.
That doesn't negatively affect you, and we're all in our busy lives. So so what I'm hearing today is, before I go make any major purchases, if I want to buy a home, I need to call my lender.
Yes.
And check with him or her and make sure that I'm still going to be good to go and I'm not going to lose my dream home. And I also think I'm also hearing I really need to get pre-qualified before shopping and finding that home that I eventually can't afford. So Cindy, what does the pre-qualification process look like?
It's not very difficult. We gather documentation for a month worth of paychecks, because that's what we were talking about. We need to have 30 days pay. So we just have the most recent month. Since we're just finishing June and we're now on July 1st, we would just need the whole paychecks for June. So if you're paid once a week, I'll need 4. If you're paid twice a month, I'll need 2. Or if you're paid once a month, I'll just need 1. So whatever that paycheck period is for you, we just need a full month. We need 2 months of bank statements, because like we said, the government wants to monitor 60 days worth of income or asset history, so that if you're using that money for closing, they know where it's been. And then we need to have tax returns and W-2s to show work history. Now there is a case where I have a customer who didn't have tax returns, so similar to not having a customer that has credit, but he was in school and didn't have to file a tax return. So we just have to get a letter of explanation, and we have them sign a form saying that they didn't have to file, but you need a copy of their diploma or their transcripts for that situation. And then any unique income. So if there's self-employed income, or if there's income from another source, like maybe you have Social Security benefits or retirement pay, we need that documentation as well.
Can we count child support in income?
You can't. It's not a requirement, but we can absolutely count it if you want to. We can count all Health and Human Services too. So if you're receiving WIC, or if you're receiving food stamps, we can count that as well.
Very interesting.
Very good.
Yep.
Okay. Well, both you ladies have been very helpful today. Hopefully our viewers got some answers that they were looking for. And what I'm hearing too is you guys are open to talk to anybody, whether they even know if they can buy again within 2 months or 2 years. You guys will help them out. So again, give us your name, company, and phone number to get a hold of you.
My name is Jan Nicola with Keller Williams Realty. My phone number is 720-5413.
Cindy Kinsler, People's Mortgage Company, and my phone number is 402-214-1068.
Awesome. Thanks, everybody. Again, if you're replaying this, feel free to ask any questions in the comments, and we will get back to you. Or if you want to privately message us, we will reply to you privately as well. So everybody have a happy and safe 4th of July.
All right.
Bye.
Bye. Thank you.